Welcome, boys and girls. This is the Postcards from the Right Edge Support and Resistance Update. It's a webinar,
Oh, yeah.
and it's awesome. Dave,
Yes,
who are you?
I'm Dave Murphy.
And I'm Rob Booker, and we are the authors of the glorious fxstreet.com blog, Postcards from the Right Edge.
Yeah.
And we join you from Wheeling, West Virginia, beautiful downtown Wheeling, West Virginia.
Glad to be here, Rob.
And we're going to do a webinar about 45 minutes long today, packed with interesting tidbits, strategies, gifts from support and resistance heaven.
Oh, yeah.
We should have named our blog that.
Support resistance heaven.
If you've never been to the blog before, the blog is positively free. And here's the link to the blog. And that's always available 24 hours a day.
Yep.
Duh, it's the web.
The web.
And so we're going to just kick it off right now, right, Dave?
Uh-huh.
All right, so it'll take me a moment to share my chart here. Just be patient. You should be looking at right now, let me just type it in for you, the Australian dollar to the US dollar daily chart. And the reason that I pull this up first is, Dave, we're about to have a spectacular time talking about the, what do we call it now?
The two trendy Grand Canyon trade.
The two trendy Grand Canyon trade. Two trendy. We use two trend lines, and we take trades based on these two trend lines.
Yeah.
All right, here we go. Let's rock 'em, sock 'em. For those of you not familiar with this manner of trading, you are about to become indoctrinated.
Oh, yeah.
Familiarized. Okay. First, we're on the daily chart. You could start from any time frame chart you want, but there needs to be a time frame chart lower than the one you start with. So you can't start with a 1 minute chart unless you're going to drop down to the 10-second chart, which is like insane. So if you start from the daily, you would drop down to the 240. If you start from the 240-minute chart, you would drop down to the 1 hour. If you start with the 1 hour chart, then you would drop down to the 15-minute. If you start with a 15-minute chart, then you drop down to the 5-minute. If you start with a 5-minute chart, then you would drop down to the 1 minute chart. You start with the 1 minute chart, then you would chop off your head. Wait, did I get any of that wrong?
Except for the chopping head off.
Yeah, no chopping of your head.
No brutality or anything.
No brutality. We're anti-cruelty to animals.
Yeah.
So you're going to start with a time frame chart. Now, Dave, does it matter what time frame chart our friends start with?
No, not to me.
No. It's
No.
absolutely irrelevant. It's absolutely positively irrelevant what time frame chart you start with.
Right.
We tend to start with either the daily, the 4 hour, or the 1 hour.
And that's because
we like it.
we like it a lot.
And because we run that blog and we can start with whatever we want.
Yeah.
It doesn't matter where you start, but the first thing you do when you start, say for instance, grab the Australian dollar, US dollar daily chart, is you're going to look for points of support or resistance, or as Dave would like to say,
Lower support.
and
Upper resistance.
right, whatever that means
Yeah.
in the world. Or was it upper
It's
support?
upper support and lower resistance.
That's so hilarious. Absolutely hilarious. And what we're going to do is, on that time frame chart, we look for two spots where the currency pair pivoted, turned around, went the other way, dropped and rose back up, or rose up and fell back down.
Right.
These two spots right here, numero uno and numero dos, are points number 1 and 2. It's obvious in these areas, and Dave, correct me if I'm wrong, it's obvious in these areas that the Australian dollar, US dollar, fell and swung around and jumped back up.
Yeah.
You can tell by these nifty, what would you call those? Emojis? Hammerific candles, the pregnant fairy,
Angry boss.
the angry boss, the two-party system candle, the whatever, who cares? It drops and rises right back up and goes the other way in both of those instances. What we did on the chart in those areas was we drew a trend line right underneath the chart in those areas, underneath the candles in those areas. And that's just trend line number 1. Now, I call that, Dave, I call that the baseline. That's the baseline. That's the main line. That's the primary line. It's the target line. It's the most important line. I always
Mm-hmm.
color that green. Dave, in our blog, we'll always color that line green.
Yes.
Why do we color it green? What does green remind you of?
Luke Skywalker's lightsaber.
That's exactly right. Luke Skywalker's lightsaber. It stood for goodness,
Mm-hmm.
truth, justice.
And the Republican way. Or, I don't know. They have a republic.
Republican.
Not
Your
Republican.
Republican creds are no good here. Whatever that guy said. Okay, so we start with the daily chart. And on this Australian dollar, US dollar daily chart, we've drawn our first trend line. And we call it, like I just said, we call it the baseline. The baseline or the money line or the target line. Now, this is where we need to drop down to another time frame chart. So I'm going to drop down to another time frame chart, and I'm going to show you what we do once we have that baseline drawn. I'm going to unshare, and then I'm going to share again. So you should be looking now, you should be looking at an Australian dollar, US dollar, 240-minute chart, or in other words, for those of you not very good at math, the 4-hour chart.
4 hours.
And Dave, what we're going to do on these trades is we're going to look for a steeper trend line on a lower time frame chart.
Mm-hmm.
So we drop down to the 240-minute chart away from the daily, and we're all set up and ready to rock and roll and draw a steeper trend line, which we've just done. For those of you who follow along in the Postcards from the Right Edge blog, this is one of the entries in that blog. This is up for, I think it is an Academy Award. Or,
oh, really?
No. It's called a Pip Academy Award. That's right. I forgot about that.
That's right.
And the Pip Academy Awards are broadcast live from Wheeling, West Virginia, from the Capital City Music Hall.
Mm-hmm.
240-minute chart. We dropped down to that time frame, Dave. And why do we draw a steeper trend line on this lower time frame chart? What's the point of that?
Well, it's starting to climb up just ever so steeply.
And if it's climbing up really steeply, what goes up
must come down.
Right. And a steeper trend line is more likely to be
broken.
Oh man, this is just like, it's like butter and a roll. This is awesome. All right, so you're in the Pip Extra Value Meal drive-through right now,
mm-hmm.
and you are getting supersized with information. All right, so we've got this steeper trend line here, and the whole point of the 2 Trendy or the Grand Canyon system is to trade from a lower time frame down to a level of support or resistance, or up to a level of support or resistance on a higher time frame. So we've got this baseline on the daily chart that we know is this level that the currency pair is drawn to, like a moth to a
light.
A light, exactly. Mm-hmm. And so that green light is money, it's Luke Skywalker's lightsaber, and that kind of stuff.
Yeah.
And by drawing the steeper trend line, look at this, Dave, we get a break below that trend line. Now, what we can immediately do at that point is, one, we throw a party.
Okay.
We invite all our friends over and we throw a trend line party. It's a very important part of the system. You have to invite your friends over and tell everybody you know about this trade. The more people you tell about it, the more people will trade in the same direction. And the more people that trade in the same direction, the more likely it is to continue in that direction. Hence, the blog. People often say, well, if you tell everybody about your system, isn't that going to ruin it? And the answer is negatory. I want everybody in the world to sell the Australian dollar with me when it breaks and closes below the blue trend line. Dave, why do we wait for a close below that blue trend line?
Because it can fake you out.
It can fake you out otherwise. It can swoosh below that trend line.
And then go right back up.
And then go right back
and
up.
continue the direction it once was.
Yeah, that's exactly right. We don't want that to happen.
No.
So what we'll do is we'll take that short trade on the break below the trend line right here at a close of 95.61. It happened at 8 o'clock in the morning. That's pretty convenient for me. I don't know about you.
Yeah.
And we put a stop loss up above the highest level that the currency pair reached when it was creating the blue trend line.
Ah.
We placed the stop loss above the highest level that the currency pair reached when it was creating the blue trend line. We put, I was going to say it again, but that would be really redundant.
So when it was creating the blue trend line, we put the stop loss above the highest point.
How did you know that?
I don't know. It just came
to you in a dream.
Yeah.
Now, there could be it could be a higher level from 2 months ago, but we don't care.
No.
Okay, we care about recent levels of resistance for the purpose of drawing our stop loss. Currency pair jumps up a bit, right? I mean, it scares the pants off some people. It retests that trend line. Do you notice that it retests that trend line in sort of mocking fashion? Sort of it mocks you. It comes up here and it laughs at you. It says, "Ha ha, you stupid trend line trader. Trend lines don't work. I tried them once. They don't work. I lost my whole account on one trade. That doesn't work." It mocks you. It mocks you. But what do you say? So what if it rises up and hits the trend line? We don't care if it rises up and hits that trend line because it's often going to throw back and hit that trend line. So be ready for that. In fact, if you don't feel like entering on the original break of the trend line, hey, that's fine.
No,
there's not there's anything wrong with it. They throw whole parades about that in San Francisco. It's not a big deal. We don't care if you enter immediately or if you wait for it to pull back in what we call a Winnipeg move and hit the trend line. Because if you wait for it to rise up and hit that trend line, you get an entry that's closer to the stop loss. So the stop loss is tighter, and not incidentally, that means it's farther away from the profit target, which is the green line.
Which means that you've got a better risk-to-reward ratio.
Right, which some people get all hot and bothered about. Risk and reward ratio. They can't stop talking about risk and reward.
Risk-to-reward ratio one more time.
Yeah, exactly. Okay, and that means that the trade right now is still open. Right? This trade is still open. This is a 4-hour and daily two-trendy trade. Okay, so those are the basics, and you should now know exactly what the basics are. Let's just remove all the tools from this Euro chart. It'll take me a minute. You might not see anything on your charts right now. That's perfectly fine. Nobody panic. All right. You should be looking at the Euro US dollar 1-hour chart. This is chart number 2 that we're looking at today. Hey, and by the way, thanks for joining us.
Yeah, we're glad you're here.
Thank you for being here. Someone asks, would you be thinking of going past the daily trend line on the Australian dollar, US dollar? No. Nope. I just go to the trend line. Just to the trend line. Once it gets to the trend line, that's it. That's the end of the trade. We close it out immediately.
Yes.
Pronto.
Super fast.
Exactly. Super fast. All right. Euro USD 1-hour chart. I think, Dave, they identify, for those of you who are not, do you wait absolutely for the price to reach the green line? Yes. It has to. Yeah. Yeah, that's the point. Yep. I see 2 levels at which the Euro US dollar, Dave.
It rose up and
turned around.
Yeah.
I think I'm going to draw a trend line over those points. Do you have any arguments with that?
No.
Okay. So right there would be fine?
That would be okay.
Okay, I'm going to color it green because that's what we do.
Yes.
Okay, so that's trend line number 1. That's the baseline. That's the target line. That's the money line right there. Now, we don't draw the second trend line on the 1-hour chart.
No.
We go to a
smaller
time frame chart.
Yeah.
What do you say we go to the 16-minute chart?
Can you do 16-minute charts?
Yeah, I'll do the 16-minute chart. Why 16-minute, Dave?
It's a multiple of 8.
Multiple of 8. Where'd you learn that?
I don't know. Like in first grade.
Oh wait, it is a multiple. Oh wait, it is a multiple.
What, you didn't think it was?
Well, 8 is a multiple of 15. You just add 7 to it.
But that's adding, not multiplication.
Wait.
But multiplication is just adding.
15 divided by 8.
Itself.
15 divided by 8 is 1.875. So that works.
Okay. Yeah, working with that.
Okay. Let's go.
That's what saved you.
We're on the 16-minute chart.
Yeah.
Okay. Now what we're going to do here is on the 15-minute, the 10-minute, the 16-minute, whatever. Now, I hope people are getting a sense for the fact that we really don't care. We're not about exact time frames. You can do the 62-minute chart and the 17-minute chart. We don't care. None of that makes any difference. It doesn't make any difference at all.
That's the whole magic of trade, or any trading in general.
Trading in general is magic.
Yeah, it is. It's magical.
Okay. Dave, why don't you Why don't you tell us what you would wait for before you took a trade? Now, let's see if we can pull back up the word euro. No, we can't. It's gone. So hold on. Let me tell you everybody where we are. We're on the euro U.S. dollar, and we're on the 16-minute chart. Okay.
And here's what I do.
Okay.
If these candles go up above the blue trend line and close above it,
just one candle's enough.
One candle is enough. If it closes above that, I'm going to buy.
Okay.
I'm going to buy the U.S. or the euro U.S. dollar.
Okay. Alex asks, how do you choose up or down trend? Because I feel that the euro is going down. Well, the two trendy.
Good question.
The two trendy system is always a counter trend system.
Mm-hmm.
It's always going to go against the trend. Remember, in the Australian dollar that we just looked at, on the daily and on the 4-hour, it was moving up. It's not a trend following system. It's a trend.
A counter trend system.
It's a trend counter system.
Mm-hmm.
How many trends do you have? I don't know. I haven't counted it yet. Higher high or lower low? Question mark. That's not a question. That's not a full sentence. I don't understand that question. I refuse to answer it.
Yeah.
Okay. That means, Dave, that you're waiting for it to pop up and close above the blue line. Now, for a lot of people, this is difficult because they think that the euro is going down, and so they're not going to do this. They're going to say, "Oh, forget it. No, I won't trade it.
Yeah.
I won't do it. You can't make me." And they don't want to trade with. They don't want to trade against the trend. Hey, that's fine. This particular system that we're talking about right now is designed to be a counter trend trading system. So to answer your question, Alex, and it was a brilliant question. This is always going to be a counter trend system. It's always going to take people off guard. When you take these trades, and if you look at postcards from the right edge, there's not, in the last, I don't know how many days of posts, in the last 3 months of posting, there's probably not one trend direction trade. But there's 20, 30, 40, or 50, I don't know how many profitable trades are in there. There's a ton of profitable trades in there.
A whole lot.
And okay, then let's Dave, I think that Alex, how do we trade with the trend using support and resistance in the systems that we use in postcards from the right edge? Well, I'm going to switch off the chart.
Okay.
And I'm going to move to a different time frame.
Mm-hmm.
And we're going to show everybody.
Okay.
Before we do that, we're just going to say that a close above the blue line is a buy trade. Target green line. Stop loss below the lowest low that is made by the euro dollar while it is creating the blue trend line.
Yeah.
Now, we don't know what that low is yet because it hasn't turned around and gone up above. It hasn't turned around. So it could go much lower.
It could.
Okay. I'm going to turn off the charts, so don't panic. Nobody panic. There's not supposed to be any charts up. Nobody panic.
Just breathe calmly, deeply, and steady.
Okay, here we go. I'm going to bring it back. I'm going to bring back the funk. Okay, here's the euro, U.S. dollar, 1 hour. All right, here's how we think about trading with the trend. We're going to draw a channel. Now, there are many of you who already know that channels are perhaps our favorite technique in the whole world.
I love channels.
Okay. A channel is simply two parallel trend lines.
Mm-hmm.
Trend line number 1 up here, trend line number 2 down here. As Alex so brilliantly mentioned, the euro is kind of in a downswing here. It's making lower lows and lower highs. And for me, that means, Dave, that we ought to be thinking about selling it. Now, how would someone go about selling it? Well, in a channel trading postcards from the right edge system, we could look at the euro dollar from this perspective here and use the bottom of the channel as a profit target.
Yeah,
okay.
Sure. Exactamundo.
There's all kinds of things that we could do. We can draw trend lines underneath the currency pair as it rises.
Uh-huh.
And then trade as it cuts below that trend line.
Right.
And use the bottom of the channel as a profit target. The nice thing about this kind of trade is that the profit target is constantly evading you.
Mm-hmm.
The currency pair is constantly moving away from you.
Which is good.
It's fantastic because if your profit target is moving away from you, then you're automatically letting your profits run which is what everybody tells you to do, but nobody ever explains.
Yeah.
What is that supposed to mean? I mean,
well, people say it, but they don't always
explain
do it or explain how to.
Now, if your stop loss is above the top level in the channel, that would put the stop loss right up here. Make it red. And that means that as the currency pair moves, the top line in that channel is going to continually go down. That means that you're going to be constantly cutting off your losers. Your stop loss is going to travel naturally with your profit target, with the currency pair. So for every candle that it prints, this level, this top of the channel, actually moves down by a certain number of pips.
Mm-hmm.
It's just a matter of geometry and degrees.
Yeah.
What I love about this system of using channels is it's got automatic letting your profits run and cutting off your losers built in to the system.
Which is fantastic.
Yeah, fantastic. It's absolutely spectacular. So that's, to answer your question, Alex, I think we've answered both. Too trendy is counter trend, and channel trading is generally pro-trend.
Pro-trend.
With the trend. All right, let's look at a question. We'd love to have people do two things. One, ask us all the questions that you can possibly think of. We'd like to get to the questions early this time. It sparks conversation.
Mm-hmm.
Conversation is interesting, and we are not. Number two, we would very much enjoy it if you submitted currency pairs to us that you would now like to look at.
Oh, that's a good
We will
idea.
look at any currency pairs you want, including the Turkish lira. AB asks, would you wait for a trend to move a certain distance before trading counter trend trades? I'm going to turn off the charts, and we'll get the charts set up for so please write in and let us know what time frames, not what time frames, what a stupid thing for me to say, what currency pairs. What currency pairs. Dave, would you wait for a trend line to move a certain distance before trading counter trend trade? Very, very
good. That's a good
very
question.
good question.
Yeah. Not necessarily.
No, I don't know.
No.
I know what you're saying, AB. You're saying, is the distance that a currency pair travels along a trend line indicative of or predictive of a certain amount of power behind a move that breaks the trend line? And the answer is not necessarily. A short trend line can actually yield a super profitable trade just as easily as a very long trend line. Alex asks, do you care about profit to loss ratio? Yeah. I'm generally only looking for trades, and remember, there's no charts up right now. Please write us and let us know what charts you'd like to look at. We always want to compare the potential profit with the stop loss. So let's look at this question here. This should still be the euro-dollar 1 hour chart.
Mm-hmm.
Let's say we sold the euro right now,
okay.
and the open of the trade was 56.51. The stop loss was 57.39, so about 80 to 85 points.
Okay.
And the profit target is down here at 55.13. It's a slightly larger profit than it is a stop loss, and that would be acceptable. Now, I'm not taking this trade right now. Remember, it already broke the trend line, so this would be getting in late, and for me, I'd rather wait for it to jump back up to get me an entry. But yes, we do look at the profit to loss ratio, and it's important for us to generally have more profit potential than loss. Alex asks, do you always wait for it to hit your green line? No. Sometimes I get out early because I'm a scaredy cat and a coward. So I turned off the charts. There is no chart up right now.
But the general principle is you want it to hit that green trend line.
Right. Yeah. Okay. Boyke asks, why do prices retest? And that is brilliant. Here's what I think. When you trade a too trendy system, and let's go ahead and share the chart again. Let's go to the Australian dollar. When you trade the too trendy system, what you're looking at is counter trend trading, and you're entering a trade in the opposite direction from everyone else. What's everyone else going to start doing if it falls in an uptrend? They're going to start buying.
Mm-hmm.
And so what you're fighting against is, this is a war of
who's right.
Who's right. And other people traditionally don't want to be wrong. I could care less if I'm wrong or right. what I want is to make sure that I don't lose very much when I do lose. In this instance, it falls below the trend line, and people who don't use trend lines, which is the majority of trend traders, for instance, that are looking at this, they're going to start accumulating Australian dollars because it looks like it's at a discount.
Mm-hmm.
It's discounted in an uptrend, and that means people are going to start accumulating Australian dollars again. It rises back up and hits that trend line, and what do the counter trend traders start to do? They start to pile on the sell trades, and this is where we find out who wins. If it pulls back from that trend line and goes down, then, oh my gosh, then you have made a correct decision and you want to start piling it on.
Yeah.
But if it starts rising back above that trend line towards your stop loss, that's why you have a stop loss. It gets stopped out and the whole thing's over.
Yeah.
Okay. Question here. What formula do you recommend to determine your lot size or risk? Okay, from St. Louis, David, thank you for asking.
Yeah.
Let's say that I know I can only risk 1 to 2% of my account on any given trade, which, Dave, for you and I,
yeah,
that's about right.
That's good.
What's the likelihood that you'll risk 100% of your account on a trade?
Not very likely.
0, right? Yeah. It's just 0.
Yeah.
Okay,
Don't do it.
if you have $10,000 and you know you can risk 1%, that means you can risk $100. Mm-hmm. If your stop loss on the trade is 100 pips, then that means that you trade for $1 a pip.
That's it.
Could you say that it's the battle between fear and greed? No, it's the battle between sanity versus fear and greed. Meaning, trend traders
much more dynamic.
Well, trend traders, right, Dave?
Yeah.
They're fearful of the trend ending, and they're going to panic at certain times,
mm-hmm.
and they're greedy and they want to get more out of the trend.
Mm-hmm.
You and I, and everyone listening today,
mm-hmm.
they're level-headed. They're not worried about that, and they're not going to panic. So they take that short trade, and they just fire it off. Now, they're saying, and people who are fearful and greedy start to panic and jump out of the long trades and start to exit, and you start to see that battle. I think the battle between fear and greed, I've never really understood what that meant, because a lot of people who are greedy traders are also fearful traders.
Yeah, I'd agree with that.
What if the green trend changes on the longer time frame while you are still in the counter trend? That's impossible. That line never changes. That's impossible.
No, because
actually.
I drew the line and it's straight.
It's straight. It's actually it's up to you whether the green line.
If it's changing, that's when you go down to the lower time frame and you draw the blue.
Well, yeah, but he says, what if the green trend changes on the longer time frame while you're in the trade? Well, it's impossible. The only thing that changes the green trend line is if you draw it differently. Yeah. But if it you can only draw it differently if it hits the green trend line, and if it hits the green trend line, then the trade is over.
Yeah.
Okay.
Well, I thought I had something nifty. I didn't.
Okay. No chart here. Panic. Oh, yeah. Well, here's a chart. The green trend line cannot change unless you redraw it.
Right.
And you would only redraw it if the currency pair fell to hit it.
Mm-hmm.
And if the currency pair fell to hit it, you would no longer be in the trade. Okay. Could we say pullbacks occur to a certain extent because of stop losses being hit? Absolutely yes. Aren't there more trend traders than counter trend traders? I haven't counted.
I lost count.
It's not about number of traders. It's about size of trades.
Yeah.
And if everybody in the world is long Australian dollar and banks start to accumulate dollars instead of Australian dollars, they start to sell. It doesn't matter if the differences are irrelevant. It's the size of the trades that matters the most.
Yep.
Okay, often support becomes resistance and resistance becomes support. Why does this happen? Just because if you draw, I mean, there's so many people that use support and resistance that they keep the lines on their charts.
Mm-hmm.
They keep them on there for a long time.
Math psychology is what keeps them there.
Yeah. Jack asks how to enter a trade if a trend line breaks.
How to enter a trade
if
a trend line breaks.
So you go to your, I hope this isn't too basic. You go to your trading platform, you open it up. If it's closed below the trend line, like it did in this chart right here where we talked about it, closes below that trend line in this area here, Then you simply go to your platform, open up the Australian dollar, US dollar, click sell, sell it. Never risk more than 1 to 2% of your account. That means if your stop loss is hit, you can't lose more than 1 to 2% of your.
That's it.
It can't change its history. It's pretty funny. How successful is trend trading for you guys? 80-20? Alex, I don't know. Didn't Alex already ask this in the blog?
Maybe.
Yeah, Alex already asked this question in the blog, so I'm not answering it again.
I think it's pretty successful. Far for me,
Alex,
it's like way successful.
Alex, I'm just kidding. We're between 60 and 70% winners, but it doesn't matter what we're success. What I already said this in the blog. Even if it was to somebody else, it wouldn't matter. But he's asking the same question again. Alex, it's up to you how successful this is. You got to test it for yourself.
Yep.
It doesn't matter if I have 90% winners. If you have 0% winners, then you shouldn't trade this. Like, absolutely. Mike is going in and out. You have memory of an elephant. Yeah, that's pretty funny. Alex, thank you for the question. We appreciate it. Can we do a position long-term trade, and what time frame should I choose? Forex Champion asks this.
That's a good question.
Yeah, daily and the 4-hour work really nicely for long-term trade.
They do.
Okay, we had some requests for charts. We're turning off the charts. It's not visible. And we are now going to open the, well, let's just look at let's look at this example right here. Here's the 30-minute pound yen. This just did a 2 trend line trade. It broke trend line number 1. Oh, such an idiot. Sorry, people. Trend line number 1 was broken here. Stop loss was all the way up there. All the way up there. Profit target down here. And it rose back up. It jumped up, then fell back down and broke through the trend. What I want to do, I'm going to turn off the charts, and we're going to look at a long-term. Oh, let's look at weekly.
Ooh.
Pound yen.
Look at that, head and shoulders.
Wow. Okay. I shouldn't have done that. I removed all the tools, but whatever. Okay, we're going to go to daily. It'll just take me a minute. Here we go. You should be looking at a daily chart of the British pound. Daily. All right. This is a daily chart, and Dave, I'm going to draw a trend line right underneath these candles.
Okay.
I think I got to change the color of the trend line, and then we'll show why we drew it where we did. Because that's the kind of people we are. We show you why we drew it where we did. You know what I like about this? I don't like, I like doing this instead of like trading like an interest rate decision or whatever.
Why?
Because I don't have to do anything right now. I'm totally calm. I'm not trying to act fast in a ever-changing market where my broker's not going to answer the phone and that everybody in the world is trying to trade and make $1 zillion immediately.
Right.
This is completely
just relax.
Completely relaxed.
And
AB says that this big candle is a mistake on X tick. So I'm going to draw my trend line there instead. There's trend line number 1 across those 2 lows.
Okay.
Dave, does that make sense to you?
Yeah.
Now we're on the daily chart. So what time frame chart would we move down to now?
I would suggest the 4-hour.
All right. Why don't we go down to the 4-hour? Okay. Are people able to see my 4-hour chart? Yeah. Okay, great. Thank you, Suki. Appreciate it. Dave, now I'm going to draw a trend line. See if it's my house. Okay. This blue trend line is already broken. Check that out. Do you see how it closed? Do you see how it closed below that trend line there? And this trade would theoretically already be open. Oh, the image is too large. Really? Let me see here. I think this image should be enough. Hold on, let me just exit out of here. Okay, you should be able to see that. All right. Image is okay. Great. This trade would technically already be open, but don't you notice? Do you notice that this is jumping up? So what if we just simply redrew our trend line along there, and we waited for a break and a close below that? Or we could just get in at a higher price if it rises up. All of those are absolutely fine to do. That's the pound yen. I'm going to look next at the, I'm going to exit out of this. So you cannot, there's no chart right now. I'm going to replicate. Okay, I'm going to go to the New Zealand dollar next. This is the New Zealand dollar, US dollar. I'm going to type this in so we all know where we are. This is a 4-hour chart. Oh, does the origination of the blue line usually start at the green line? Does not have to. Sometimes it does, but it does not have to. That is not a requirement. The origination of the blue line does not have to start at the green line. Do I wait for certain times of the day to trade particular currencies? No. Okay. This is the New Zealand dollar, US dollar 4-hour chart. This is going to be our baseline, so I'm going to color it green. And then I'm going to draw a, now this, in this case, that's too steep, that's not steep enough. In that case, let's look at something like this. Yeah, this is looking, actually, folks, I really like this trade. This looks really nice. We've got a steeper blue line. You can see that the blue line and the green lines don't touch, that the blue line does not originate at a point near the green line. That is not a requirement. Not a requirement. This is the New Zealand dollar, US dollar, 1-hour chart. So this is a lower time frame. And we're going to wait for a close above the blue line and target the green line. Now, if you want to trade with the trend, you would do something completely different here. You would actually use channels and whatnot and trade with the trend. Let me introduce you to another option that we have if you would like to, and you would prefer to trade with the trend. We're now on a 15-minute chart. Let me know if you're unable to see this. This is the 15-minute chart. You can wait for the currency pair to rise up and hit the trend line. That's not going to be visible, so I'm going to get rid of that. Right there, you could sell it right now in the midst of an overall downtrend. You could sell it right now, and you could put a stop loss, I'd say 20 or 30 pips above the blue line, so right up there, and ride your profit. Just keep moving your profit down. Trail your stop. Every time it moves down 10 pips, move your stop loss down 10 pips, so it's constantly a 30-pip stop loss. And just see where you can go with the trend. If you prefer to trade with the trend. I don't trade this system that way, but this is the reason that trend lines were originally invented, was so that people could trade these touches of the trend line with the trend. So we've started with the 4-hour, and we've dropped down all the way to the 15-minute. And we've got two different types of trades that you could take. On the 1-hour, we could take a counter trend trade up, but on the 15-minute, we could take a trend trade down. I want to repeat that I'm not taking that trend trade down. I'm waiting for the counter trend trade up. Do you wait for certain times of the day? No. Any favorite pairs, asks Alex. Alex, what a brilliant question. With the two trendy system, I'll trade any currency pair in the world. Any currency pair in the world, and I prefer to trade the pound dollar, euro dollar, pound yen, those ones. Mm-hmm. My least favorite currency pair in the world is actually the US dollar to the Canadian dollar. That's my least favorite currency pair in the world.
What about the dollar yen?
Dollar yen's second least favorite.
But I was going to say dollar yen. The dollar yen does work on. I mean, I've done some.
Okay.
Yeah.
Okay, so it does work. Is it a good idea to filter the break with a break on the RSI? No. Yeah, loony phobia. That is actually really funny. Juan, I do not filter the break with the break on the RSI. Does not make a difference to me.
You know, usually in my experience, when it's closed above or below that smaller time frame trend line, going towards the larger time frame trend line, it usually I've had one that stopped out. That's it.
You're kidding.
That's it. I've had one that stopped out on me.
Wow. I've had more than that, but not very many.
Yeah.
This is the Lovin' Spoonful. Do you believe in magic?
Yeah.
How many years are you trading, guys? 7.5, 8 years.
And I'm less.
Dave, while people are listening to this song, I'm going to look at one more currency pair. Five minutes left if you can. Pretty good song. Good session, go fast. Yeah. Louder song. Any recommendations on this system? Any recommended book on this system? Yeah, here it is. Ashu, make sure you go to postcards.fxstreet.com because we'll have a DVD available on this system within the next 7 days. It'll be available. Okay, let's look at one more trade. All right, here we go. I'm going to draw a trend line on the 4-hour, and the 4-hour chart is the U.S. dollar to the Singaporean dollar. I don't even know what the spread is on this, or if there's any broker on earth where you can trade this. All right, so the DVD comes out next week. Can we see again the euro dollar? Well, if we have time, we can see it. All right, there's a double trend line system trade on the U.S. dollar, Singaporean dollar, the Siegfriedian dollar. All right, let's look at the euro dollar. Someone was saying there was a break on the euro dollar, and I'm not really sure I see that.
No.
Euro USD. Yeah, not real sure I see that right away. So we'll have to pick that up in the postcards from the Right Edge blog. Any last questions? Suki, hello from Singapore. That's awesome.
Awesome.
Welcome. I may come to Singapore in September. The charts are off, and let's just take people, Dave. Let's take people to postcards from the Right Edge.
Awesome.
We'll make the browser small enough to show. So this should be visible in just a moment. I don't know if that shows or not. Maybe. Yes. I don't know. Wow, that postcards from the Right Edge isn't loading. It's kind of weird, isn't it? Do you notice that?
Yeah.
It's kind of bizarre.
Well, there's so many hits on it that.
Oh yeah, there's so much traffic on it. That's what it is.
Yeah.
Okay, so there's the postcards from the Right Edge. There's the blog. So you're more than welcome to visit us on there. Make comments on the blog. Make a zillion comments on the blog. I would really love that. We'd love to stay in touch with you about when am I coming to Toronto, Canada? I don't know. Traveling so much less.
Yeah. So
much less.
But it is Canada.
Canada is awesome.
We like Canada.
We love Canada. We love you guys. Thanks, everybody, for joining us today. Whatever the next session is, I'm sure it's awesome. And really appreciate FX Street. And I'm so grateful for the chance to be here with Dave today and talk to you about support and resistance. We wish you all the best. Remember, never risk a substantial amount of money in your account. Never trade without risk management, meaning never do anything to risk more than losing 1 or 2% of your account on any trade. It's so important. So many people lose their accounts every day.
And you don't want it to happen to you.
Exactly. I'm going to have a bowl of cereal now.
Oh, yeah.
Thank you, everyone, for attending. See you in Postcards from the Right Edge, postcards.fxstreet.com. I will be in Barcelona. Dave, we are going to Barcelona in October. It is one of the most awesome conferences that we have ever been to. It was so good last year. It was so good. And we may release a new indicator at that conference this year. It's one of the only times we're going to speak again this year since we're staying close to home. So please join us in Barcelona. There's still an early bird discount for that.
Excellent.
Thanks, everybody.
See you later. AB.
Bye, AB. It was great to see you. And Tom D. and Juan. And Lydia was here. Storm Rider.
Bull Trader.
She's a woman. Got a black trend line woman.
Chuck E squared.
Yeah, that's Chucky. That's Chuck S. Yeah.
Yeah.
Good to have Chuck here.
That's what I thought it was. Mustafa.
I love that name. Mustafa. Say it again. Say it again. Mustafa. And Yoshi. It's so good to see all of you here. Make sure you comment in the blog. I can't get enough of this, like playing the music in a webinar, because I'm sure nobody else does it. Yeah, you bet it's Santana.
Oh, yeah.
Yeah, it is. All right, I'm just like picking up like hotcom payment time from FX3. We'll get out of here so the next guy can jump in here.
Yeah.
See you later, alligators.
Bye-bye.
Adios, amigos.